Good day, everyone. My name is Inyada Abdulwasiu from ICAN Online Tutors. And today is our introduction class to financial accounting. And before we start with what we have today, I would like to take you through the syllabus, and so that we're able to know, okay, in this particular journey now that we want to start, what are some of the things that is here. So just for me, starting with the first lecture for today. So let me make a brief overview of the entire syllabus. Okay, before I start with this document with every one of us. I think we all have that. So let me go to the let me go to the ICAN website. So financial accounting. So these are the list of chapters that will be that we are going to be talking about in this particular subject. We have from chapter 1 to chapter 16. And chapter 1 and 2 is all about introduction to accounting. Then we'll also be looking about what is accounting equation, then the double entry and what. So these are the list of chapters. So let me go through to the syllabus themselves. So this is the main competence that at the end of this particular lecture, and even at the end of the end of the exam, they can indicate that we should be able to develop a high level of competence on this particular area. At least the candidate, after studying for this examination, we should be able to explain the scope and purpose of financial accounting. And that is what we are going to be doing today. What are the scope? What are the scope means that different area of accounting. We have the financial accounting, which we are specialized on. We have the financial reporting, the corporate reporting. We have auditing, we have taxation, we have forensic accounting, and the rest. Like those are the scope of accounting. Then the purpose of financial accounting as well. What's the purpose of financial accounting? And one of the main purposes of financial accounting is to provide information to the users. Then another thing that you should be able to develop competence on is understanding the types of business transaction and their document, and understand the type of business transaction and documentation. And the process of documentation of business transaction is what we call bookkeeping. The process of recording transaction is what we call bookkeeping. So you should be able to have competence that, if this particular transaction occur, which account are we going to debit, which one are we going to credit? Then another competence that you should be able to develop at the end of this is to explain cash and bank transaction. Cash and bank transaction. We'll be looking about cash book, a single column cash book. We'll be looking about the 2 column, and we'll also be looking about 3 column cash book as well. Bank transaction as well, and the reconciliation of both the cash and the bank transaction will also be doing reconciliation as well. Then another area that we also need to develop competence on is explain and demonstrate the uses of double entry principle. And please have it at the back of your mind. The double entry principle is that for every credit there must be a corresponding entry. I don't know, maybe some of us have background of accounting before, but whether you have a background of accounting before or not, we are starting from the roots. And the principle of double entry is that for every credit, every accounting transaction have twofold. Please don't forget. We are starting from the it's not a difficult subject. We are starting from the root. Even though you have whether you study about chemistry or is a science-based or other management-related courses, we are starting from the beginning now. And the principle of double entry said that what? For every debit, there will be credit as well. For every debit entry, there must be a corresponding credit as well. And every accounting transaction have twofold, meaning that well, we are going to debit one and we are also going to credit another one. Then another very important area, another area of competence that you should be able to develop at the end of what? At the end of this particular syllabus is what? Understand and prepare what? Reconciliation. Understand and prepare what? Reconciliation. We can do what? Reconciliation of what? Control account, which we are still going to be talking about. We are still going to do what? Reconciliation of what? Reconciliation of cash book with our what? With our bank statement. And that is what we call what? Bank reconciliation statement. There may be a disagreement between what we have in our own cash book, which we are still going to talk about, it's with the world with our bank statement. As individual now, you can maintain your own record that, oh, I have a what 1,000 naira in my what as my cash, as my expected in the bank statement. But your bank statement may not show what 1,000 naira. It can be lesser than 1,000 naira, or it can be higher than that. So we need to perform a reconciliation now to bring the two together. We'll also be talking about that. Recording what transaction and what recording transaction and events. What if you do this particular thing, what are you going to what? Which account are we going to debit? Which one are we going to credit as well? And prepare what basic financial statement for corporate and not corporate entity. For corporate, we'll be looking about what the statement of what profit and loss and other comprehensive income. Then we'll also be looking about our what statement of what financial position. For non-corporate entity, we can be talking about the single entry. We can also be talking about what account for not-for-profit making what organization. Then as an accountant as well, all the 15 subjects of ICAN, there is what we have what ethics. All the 15 subjects of ICAN, we have what ethics. So we'll also be talking about what ethical consideration as well. So these are the main competence of this word, of this entire word syllabus. So what is now the breaking down of the word? What is the breaking down of the syllabus? The syllabus is breaking down into what? It's breaking down into what? Into 7. We have what? The first one is what? Accounting what? Framework. Accounting what? Framework. And the weight is what? Is 10% of the entire syllabus. And this particular word, this particular on syllabus section A, that is what we are starting with today. And it comprises of what? 10% of the entire syllabus, which is what we call accounting framework. It is what? 10% of the syllabus. Then we also have the second section of the syllabus, which is what? Recording what? Recording financial transaction. Recording financial transaction. If you purchase, if you sell, what are the accounting entry that you are going to you need to perform? That is what? Syllabus section B, and which is what? 15% of the 15% of the syllabus is recording what? Recording financial transaction. Then the third section of the syllabus is what? Reconciliation. Reconciliation can be in form of what? We can have control account reconciliation. We can have the most popular one, which is what? Bank reconciliation statement. So, and it carries what? It is 15% of the 15% of the syllabus. Then we also have what? Accounting for what? Accounting for transaction in the financial statement. This one is about what? It's about adjustment. It's about adjustment. Then we'll also be looking at one of the most important sections of the syllabus, which is what? Account for what? For partnership, not for profit making entities and what? Incomplete record, and which is also what? 15% of the entire syllabus. We'll be looking about what? Accounting for partnership business. And we'll also be looking about what is the meaning of partnership today. And what maybe majority of us listening to me now, we all heard about what partnership, or maybe some of us could have carry on a business in a partnership form before. So we have account for what? For partnership. Then we also have for what? Account for what? For not-for-profit making organization. Account for what? For not-for-profit making organization. Then we also have what we call what? Incomplete record. Then we'll also be doing what? Financial statement, where we are going to be preparing what? Whether it's our statement of profit or loss or other comprehensive income, our statement of changes in equity, the statement of financial position, and we'll also be talking about what? Cash flow as well. Then we'll also be looking about what? Virtual accounting, which is the new what? Which is the new section that is added to what? That is added to the new syllabus, which is also what? 10% of the entire syllabus. So this is the syllabus overview. So
Hello,
the
sorry.
starting,
Hello.
yes, I'm with you, sir.
Is this weight they're talking about? Is it how they mark or what? Is it the
No,
marking? Okay.
okay, don't worry. The weight means that it is the word. How will I explain the weight? The weight is that, for example, now look at the first one, accounting framework. The way it means that what it's cover what 10% of the entire syllabus. The entire syllabus is what is 100%. But this particular section now, which is what accounting framework, it only covered 10% of it. And the word, this particular word framework, it only contained in what in chapter 1 and 2. So you can see it now, the word detailed syllabus. We have what accounting word framework, which is what 10% of the entire syllabus. So what build up this particular word accounting framework is just what 2 chapters, which is what chapter 1 and what, which is chapter 1 and 2. And you can see it as well. You can see that as well. This is what this is chapter. So this particular 10% of the entire syllabus is just what? It's just from what chapter 1 to what? It's just from chapter 1 to 2. So it's just what 10%. The weight is just the what the coverage, how detailed it is. So like this first one is just what? It's just 10% of the what of the entire syllabus. And which is what from chapter 1 to what? From chapter 1 to 2. Okay, and that is our what? That is our starting point for today. Okay, so please, as we are going on, if you have any question, please, you can just use your word. You can just raise up your word. You can just raise up your hand, which is what I'm going to attend to that. Okay, so please, as the lecture is going on, if you have any question at any time, you can put it in the chat box, or you can raise up your hand. You can see the word. If you are using the mobile phone, you are going to see a 3 dots in more. So you can just click on that 2 dots in, then you are going to see raise up your hand, or you can use the chat box if there's any question as we are moving on. Okay, please. So now let's start with the first one now, which is the syllabus section A. And everything that we are going to be talking about today, so is about the introduction, is about the introduction aspect. So before we start talking about accounting now, the first thing that we have to understand very well is what is business organization. Because it is when you have business that you cannot be talking about accounting. So the first thing that will come up before accounting now is about business. We need to understand different forms of business organization, because different form of business organization have their own peculiarity. The account that we are going to prepare for not-for-profit making organization is different from that of profit-making organization. So the starting point before we can now be talking about accounting is we need to understand business we need to understand business organization. And one of the words in the major forms of business, one of the main aim of the motive of starting business most time is for profit. But there are some business, it is not all business organization that is established for profit making. There are some that the major motive of establishing them is to provide service. So a business is an economic system where goods and service are exchanged for one another, or for money. That is a business. It is a business is a system where goods and service are exchanged for one another, or for money. So goods are exchanged for one another. So that means that they are referring to the barter system, the trade by barter, meaning that, for example, now we can exchange goods for service. Oh, I need rice, but I have beans. Or we can exchange goods and services for money. And that is the current system nowadays. I can render a service for you, and you are going to pay. A business entity is a commercial organization that aims to make a profit from his operation. So that means that the main reason of conducting the business is to what? Is to have a profit. It's for what? It's for profit. Can integrated set of what? Activities and assets that is capable of being what? Conducted and managed for the purpose of what? Providing a what? A return to what? To investor or the what? Or the owner. Can integrated set of what? Activities and assets that is capable of what? That is capable of being conducted and managed for the purpose of what? Providing return to the investor. Meaning that what? You are what? You take risks. That is one of the futures of what? Business is what? It's involved risks. Because you can see in another word, we say that the aim is to what? Is to make profit. That is our major aim. But there are some times that this profit may not be realized. When we are talking about in accounting now, it is not all the time that you are going to have a profit. There are some times that you are going to have a loss. So it is a risk. Loss can occur. Profit can also occur. But the main purpose of now establishing that business is to provide a return for you as well. And if you're able to manage it very well, if you're able to analyze your business environment very well, then you should be able to generate what? You should be able to generate profits. So what are now the characteristics of what? Characteristics of business now. Business exists to what? Business exists to make profits. Business exists to what? Business exists to make profit. That is one of the aims. Majority of business organizations exist to make profit, but we see a few of them, maybe like the NGO, the not-for-profit making organization. They may not what? They may not. The main aim is not to make profits, but majority of what business is to what? Is to make profit. Business exists to what? To make profit. Business can make what? Profit by supplying goods or services to what? To others, which is what we call the customer. So you are going to make this profit not as a result of your what? Not as a result of what? You are doing it for yourself. You are doing it for others to what? To pay, and it's your what? It's your customer. Business make profit by supplying goods or by rendering what? By rendering service. So either you are supplying goods or you are rendering service. That is when the what? That is when the profit will come up. If you don't do anything, you register a business with the what? With the CAC now, and you are not doing anything, there's no what? You're not going to have profit. But when you establish the what? You register this company and you engage in what? Maybe production of goods or rendering of service. As a result of these activities, profit is going to what? Profit will come in. Another one is that business that supply goods might make goods or buy them from what? From other parties. Business that supply the goods can what? Might make those goods or buy from other what? Or buy from external party. Don't worry, to some of us that are doing what we call what? Management what? Information, which is also a subject at this level. We have a what? We have a technique. It's under marginal costing that we call what? Make or buy. So there are some situations whereby you need to what? You need to buy. And there are some times that you need to what? You need to make those goods by yourself. Okay, so there are some times that, okay, the goods that you are selling, it may not majorly that you are the one that is producing it. Oh, you are selling this particular item now, okay? As a result of that activities, that is when your profit will come in. But these goods that you are selling, that you are supplying, you may not really be what? The organization that produces it. So we have a situation like that we have what we call what? Make or buy decision. So the good that you are selling, you can be making it by yourself, or you can be buying it, then you send it out to your customer. Profit is the reward. Profit is the reward of accepting what? Profit is the reward of accepting risks. Profit is the what? Profit is the reward of what? Profit is the reward of accepting risks. That is the reason why you take the risks is of what? I make mention of it earlier that what? If you establish a business now, it is a risk. Profit can come in, loss can also come. So the profit now is your reward of taking what? Of taking risks. The profit of a business belongs to his what? Belongs to his owner. The profit of a what? The profit of a business belongs to what? Belongs to the owner. Belongs to the what? It belongs to the shareholders. It belongs to the what? It belongs to the owner. That is the reward of you of taking risks. So these are the what? These are the characteristics of what? These are the characteristics of business. Business exists to make profits. Business make profit by supplying goods or what? Or services to others. Business that supply goods might what? Might make those goods or buy them from what? From other parties. And we have a what? And it is not in our syllabus, in another subject called what? Is a what? Is a, we call it a what? A marginal costing technique called what? Make or what? Make or buy. And another characteristic of business is the profit is the reward of accepting risk. And the profit belongs to the what? The profit of the business belongs to his what? Belongs to his owner. So what are now the what? The type of what? Business entity. What are the type of what? Business entity? We have the what? What are the type of what? Business entity? We have what? A sole proprietorship. We have that of what? We have that of partnership. Then we also have that of what? That of companies. So these are the main three types of what? Of business. We have the word, the sole proprietorship, we have the word, the partnership, and we also have the word, the company. So the company now can now be divided into what? Into different what segment. Can have what? Company limited by guarantee, company limited by shares, and unlimited what? Liability. And at least you'll be talking about that in your what? In your business law as well. So our focus now is to what? Is to make it what? A brief overview of the what? Of the different forms of what? Business entity, which is what? The sole proprietorship, the partnership, and the what? And the limited as well. So from the word, the sole proprietorship, I'm very, very sure that what? This is not the word, this is not the first time that every one of us that is listening to me now, we heard about this word. It's sole proprietorship word, it's sole proprietorship business. I'm just making that assumption that this is not the first time. And when we say what? A sole proprietorship is a business organization that is conducted and managed by one individual. A sole proprietorship is a business organization that is managed and run by what? By one person. And the ownership is not separated from the business. It is what is the owner that is managing the day-to-day affairs of the business. This business of a sole trader is owned and managed by what? By one person. Any individual who set up in business on his or her own without creating a company is a what? Is a sole trader. You are the one. I'm the what? Oh, I have a shop now. Oh, maybe I already started the shop with the what? With the CAC, and I am the one that is managing the day-to-day affairs of the business. That is what we call what? A sole proprietorship of business. So what are some of the important features of this of these forms of what? Business organization? There's no a legal distinction between the proprietorship and the business. There is no a legal distinction between the proprietorship and the business. Meaning that the business is not separated from the business is not separated from the owner. So if there's a liability now, then it is the owner that will also find a way of on how to settle the liability. Asset of the business belong to the what? The assets of the business belong to the sole proprietor. It belongs to the what? To the owner. The sole proprietor can extract cash and other assets from the business, and that is what we call drawing. Don't worry, very soon, maybe now in some of the classes that we are going to be talking, we'll be looking about drawing. We call it owner's drawing. So the owner, the sole proprietorship can also withdraw from the business. And there's a concept that we are still going, if the time permits us today, we are also going to talk about it. And that is what we call entity concept. Entity concept. An entity concept in accounting is saying that the owner is different from the business. The owner is different from the owner is different from the business. The owner is different from the business. That is what the entity concept is saying. So I have to keep the the business transaction separate from the what? From the owner transaction. We're still going to talk about them as well. What are the features of what? Sole trader. There is no illegal what distinction between the business. There's no corporate governance. There's no illegal what distinction between the proprietor and the business. The assets of the what? The assets of the business belong to the what? The sole proprietor, and the sole proprietor can extract what? Cash and other assets from the business, and that is what we call what? Drawing. Another one is that what? The business may be financed by mixtures of what? Owner capital and what? And loan. So it can be a mixture of two. My own private what? My own private capital. Then I can also take loan as well. So this is how you are going to finance the business. It may be from the what? From the owners, or it can be the what? There are some business organizations, a sole proprietorship that they may not have loan. So the financing and is only from the what? Is only from the what? The sole proprietorship, the sole proprietor. And we can have some where, oh, the owner is going to contribute, then it can also what? Can also take a loan maybe from family member or from the financial what? Institution. And another feature is that what? A sole trader business might employ what? Many people, but it is usual for the proprietor to take a very active role in the business, exercising a higher degree of what? Of control. Meaning that in a sole proprietorship as well, it may not be only the owner that is taking the decision. The owner can also what? The owner can also do what? The owner can also employ some individual, but the owner take the what? It take the active role. It take the what? It take the active role. The biggest decision is the one that what? Is the one that that have the responsibility to make such decision. So other people can also contribute as well, but the final say is the owner of that what? Is the owner of the business that will take such decision. And the last features here, a sole proprietorship business can be sold as a going concern by its owner. Yes, in terms of what the owner can also sell the business as a going concern as well. And that's one of the words, sometimes that's one of the disadvantage of these forms of business in terms of what the existence of the owner, the non-existence of the owner can also bring about the non-existence of the organization anymore. Unless if it is a family business in terms of if one individual died, the children can continue managing it. So these are the essential features of sole proprietorship. There is no illegal distinction between the proprietor and the business. The assets of the business belong to the sole proprietorship. The sole proprietor can extract cash and other assets from the business, known as drawing. The business can be financed in a mixture of the owners, and there can also be loan as well. The sole proprietorship the sole proprietor can employ many individuals as well, but it's usually for the proprietor to take a very active role in the business and exercising a high degree of control. So these are some of the features of sole proprietorship. So what are the advantage of what are the advantage of this form of business organization? Limited paperwork and therefore cost. Limited paperwork and therefore cost in establishing this type of structure. Meaning that there's a less paperwork and it is less costly to establish. Just for example, now, if you want to establish a business now and you want to register your business with the Corporate Affairs Commission, for a business name, it is less expensive than maybe a corporation or other business form of entity. So it is less and even though when you are registering a business name, the information that will be required it is less compared to other forms of business organization. If you are registering a business name, just to look for who is the director, is this particular individual, then whatever your means of identification is uploaded. So are you able to carry out the registration to form this organization? There's a less of paperwork. And it is very what is a little bit cheap to what to establish compared to other what forms of business organization. Owner has complete control over the what over the business. Owner has what? Owner has control, has what? Has complete what? Complete control over the what? Over the business. And another one is what the owner is entitled to the profit, and is the ownership of the what? Ownership of the assets. The owner is what is entitled to profit, meaning that if you have any profit, it belongs to the owner alone. And the asset of the business is also what also belongs to the owner as well. Less scrutiny reporting obligation compared to other business structure. Less scrutiny in terms of what the government is not really what they usually take it as what as very hard on these forms of business organization compared to other forms. Oh, the federal inland revenue is not really running with this. Come and pay your tax and this. So there's a less scrutiny reporting obligation for this. Please, your reporting may not really be big. Even there are some of them that you may not really pay tax once your turnover does not exceed a certain criteria. So there's a less reporting obligation compared to other business structure, and that is one of the advantages of this. And another one is that can be highly flexible. Can be highly flexible in your business activities. You can be selling you can be selling rice. You can mix it with other business as well. But in other forms of let's take that of companies now. So if you register that I'll be engaging in the banking now. So if you want to do that means that your principal activities is relating to banking. So if you want to have any other forms of business organization, then you have to do a structuring. And that's why maybe in Nigeria now, especially the banking can be hearing now becoming a holding company now. So maybe apart from banking, I can also be doing insurance. I can also be doing pensions relating activities. And that one also require a certain things. Also require a certain criteria that you have to meet for you to change your structure. So the Security and Exchange Commission have to approve that before you can. But in a sole proprietorship, you are selling rice and you are selling another forms of who will ask you that why are you selling rice now? You can see there's a less it is highly flexible compared to other forms, meaning that you can easily change. Oh, if you are doing this one, if this one is not profitable, then you can do another one as well. So what are the disadvantages as well? What are the disadvantages of these forms of business organization? The owner is personally liable for all debts. The owner is personally liable for all meaning that there's a unlimited liability. There's a unlimited liability. The owner is personally liable for all debts. Because there's no a special obligation between the business and the owner. So if there's a liability now, then the owner is also going to be responsible for it. You can see now there is no illegal distinction between the proprietor and the business. So if there's a liability in the future as well, who will be responsible to meet those obligations is the owner. So the owner is personally liable for all debts. And another disadvantage of these forms of business organization is that personal property may be vulnerable for debt and other business liability. Meaning that apart from the proprietor, apart from the business property, then the personal property of the owner is also liable to is also very vulnerable for debt. Meaning that if the business debt is not if the business asset is not enough to meet the liability, then the owner, you have to go and sell your private property to meet the business to meet the business debt. So your car, the owner's car, his property, his building is also vulnerable to what? Is also vulnerable for the business debt. If the business debt is the business asset is not enough to what, to cover the liability, then the owner, you have to go and do what? You have to sell some of your what? You have to sell some of your private what? You have to sell some of your private property to what? You have to sell some of your private property to meet the what? To meet such what? To meet such obligation. Then another disadvantage is that what? A large sum of capital are less likely to be what? Are less likely to be available to a what? To a sole trader. So meaning that what, as a sole trader now, is what the financing is what? The financing is going to be very, very low. Please give me a few seconds, please. So sorry for the breakup. So as we are saying, the third disadvantage is that the capital of the world, the capital of the business is very, very limited compared to other forms of what, compared to other forms of business organization. So the capital base of this world, the capital base of this particular organization is very, very what? It is very, very low. It is very, very what? It is very, very low compared to other words, compared to other forms of what? Other forms of business organization. Because the large sum of what? The finance that is available to this business is only coming from the what? From the owner. A large sum of capital are less likely to be what? To be available to a what? To a sole trader. Leading to what? Reliance on what? Overdraft and personal what? And personal savings. So there's a what? There's very, very low what? There's a very, very low capital that is available to what? To these particular forms of business organization. And the expansion, and for you to grow very well, you know that for business growth, capital is also what? Capital is also required. So if the finance is not available, then there may be a growth problem as well. May lead to what? Long working hour without the normal employee recreation leave and other benefit. As the owner, you have to try as much as possible to work 24/7, Monday to Sunday, you're always there. So there's no let me I'm not going to I have entitled to collect a 1 month a 1 month leave. So in these forms of business organization, that may not really be possible. If you want to take a leave, that means that you want to close the business. And another disadvantage is that may be issues of continuity of business in event of death or illness of the owner. That's what I mentioned earlier. That if the non-existence of the owner can bring about the non-existence of the business anymore as well. So these are the advantage and disadvantage of these forms of business organization. This may just be like a revision to some of us. Then we also have another forms of business organization as well, called a partnership. And we are also going to we'll be talking about briefly on them now. Then we'll also be looking about partnership accounts in more detail as we are moving on, both the theoretical aspect as well and the computation aspect of partnership or of partnership accounts. And from the word partnership, meaning that we have different partners. It is not only one individual now. We have two or more individuals that is running these forms of business organization. A business partnership is an entity in which two or more individuals called partner share the ownership of the business. It's two or more. They share the ownership of the business. That is a partnership. Some of us, at least every one of us in this life class now, we can come together now and establish a business. We can come together now and establish a business. So far that it is not just that Abdulwasi that is running the business, then it is a partnership. Then what are the important features of these forms of business organization? There must be an association of or two or more persons to carry on the business. That is one of the requirements. For us to say that, oh, this is a partnership, then we have to have two or more persons that is carrying on the business. If one individual, that is not a partnership. For this partnership business to exist, then we have to have two or more individuals. The owner of the business are personally liable as individual for the unpaid debts and other obligation of the business as well. So the owner, the partner are also liable. So if the capital base of this business is not enough to meet the asset, the capital base, your asset base is not enough to meet the obligation, then the partner also need to go for their own private property now to get how the liability of the business will be settled, because the liability has to be settled. You have to settle your liability. Then another one is that profit of a partnership are shared between the partner in agree way. Yes, that's one of the advantage of this. So there's when we get to partnership accounting, the computation will be looking about the sharing ratio could have been provided, that profits we are going to share maybe you collect 10%, I'll collect 30%, other individual. So the basis of sharing will also be it will also be determined when we are forming this business, and that will be contained in a document called partnership deal. Partnership deal is just is the document, is the agreement that bind the partners together. So all the agreement, the required capital that we need to contribute, our sharing ratio, the signature, the next of kin of the partner, all those information relating to the partner, it will be contained in the partnership deal. So the profit sharing ratio will also be there in the partnership deal. And the profit of the business, you can see in the sole proprietorship now, it belongs to the owner, just that single individual. But here now, it belongs to it belongs to the partners, all the partners. Then another important features of partnerships, that when the partners die, when partners die, the partnership comes to an end. Here we are referring to if all the partners die, and sometimes that is not really possible. That is not really possible. But there are some times that there are some business, especially if the active partner die, then that can bring the business to an end. So if a partner die in the partnership business, that can also bring the partner to an end, especially your active partners. So if this particular partner die, then that can also bring about the And don't worry, when we are in partnership account, when we are doing the computation, we can see a situation whereby the reason why we are going to dissolve the partner, where they are going to ask us to prepare an account called realization account, is as a result of death of the partner. There's no any other thing again. So, and if this particular die, then the examiner will ask us to prepare realization account, just as a result of one partner died. So if one partner died, that can also bring the partnership to an end, especially if it is the active partner. And the next of kin said that, oh, I'm not interested. So please, I want to withdraw the money out. The profit of the business belongs to the partner in what's in agree ratio, just like we have mentioned. The asset of the business belong to the what belong to the partner as well, based on the what based on the ratio. Partner can extract cash and other assets from the business, also known as what, also known as drawing. In the sole proprietorship business, the opportunity is also available. The partner can also withdraw. We call that what, drawing. And when we are doing the computation, have it at the back of the mind, there are some time that we are going to charge interest on what? Interest on drawing. Interest on what? Interest on drawing. On what? On partners drawing. Because there's already interest on capital as well. So the capital that you contribute to the formation of the business, there's interest that the business organization is going to pay you. Then if you are also doing withdrawal, then there's also a charges as well. The business may be financed by a mixture of what? Partner capital and what? And loan. So a partnership business can also have a loan as well. Okay. So let me go to the what, let's talk about the briefly about. So these are some of the what, there are many. What are the features of what, of partnership? Please don't forget, this has been examined before, and that will not be the last, because it's still in your what, it's still in your syllabus. There must be an association of what, of two or more person to carry on the business. The owner of the business are personally liable. Okay, the profits are shared between the partners. If the partner died, if certain partners died, then the business can also become that can also bring the business to an end. The profit belongs to the partner based on agreed share ratio. The asset also belongs to the partners based on the what? Based on the agreed ratio as well. The partner can also withdraw cash and other forms of what? Business from the what? From the organization known as what? Known as drawing. And it can be financed as a mixture of the what? The partner's capital and what? And loan as well. So what are the some of the what are the advantage of these, and what are the some of the what the disadvantage of these as well? What are the advantage of what? Partnership? Less was scrutiny reporting. No requirement to make financial statement publicly available. No audit requirement unless the partnership is what? LLP. And the CAMA was in Nigeria before in the CAMA, there's no what we call what? LLP, meaning what? Limited liability what? Partnership. But CAMA 2020 introduced what? Limited liability partnership. Especially the professional firms, like the maybe accounting, the law firm. Most of them nowadays, they are what? They are LLP, meaning what? Limited liability partnership. So there's no requirement for you to have your audit. There's no requirement for you to publish your financial statement, just like what MTM MTM provided during the last month, and that is good for them. And so there's no requirement like that you must provide your financial statement. Then another advantage is that additional capital can be raised because more people are investing in the business. So just compare that to to a sole proprietorship. Now in a sole proprietorship, now the finance that is available is only from the finance that is available is only from the partners. It's only from the sole proprietorship, maybe your personal saving and the loan. So, but that is just one individual. But in a partner now, the capital base is to be more than in a sole proprietorship, because there are some partners that we can have like 10, we can have like 8. So it's a pool of resources. Everybody who contribute together, and that will really help the business to really to grow faster than a sole proprietorship that just depend on one individual. What is another advantage? Additional capital can be raised. Okay, I think we talk about this. Another one is division of roles and responsibility and increase skill set. There's a division of labor, meaning that each of the partners have a certain responsibility that is given to them. What partner A is doing may be different from what partner B is doing. And whenever there's a way of division of labor, productivity will increase. Not just that you are the in a sole proprietorship, you are the one that will do this, or you are the one. So like a partner now, there are some partners that can go on leave while others will continue. So there's a division of roles and responsibility. And when there's a division of roles and responsibility, accountability will also it will also come in. Productivity will also increase. Sharing of risks, sharing of what risks and losses between more people. So just like in the case of what one individual in a partnership, now the profits belong to different individual and the loss as well. No company no company tax on what on the business. Profit are distributed to the partner and are subject to what the partner are only subject to what to personal income tax. What are now the disadvantage of a partnership? What are the disadvantages of partners? So let's look at it briefly. Partners are jointly personally liable for all debt. For all debt. So it is not individual now, it's not just one individual as the case of what sole proprietorship now, but is what is combination of what different individual. There are costs associated with what setting up the partnership agreement. And the cost of setting up a partnership agreement is even higher than that of what of a sole trader, because as a sole trader now, if you want to register your company, it's just a business thing. But in a partnership now, if you want to establish a partnership business, then it is also more costly. Then there may be a issue of continuities of business in event of death or illness of a partner. That's another disadvantage of this as well. Just like I made mention, which we are still going to come across, that when there's an account in a partnership account called dissolution account, or we call it realization account. In financial accounting, when you hear realization account, it means that in a partnership business, that the partnership business has been dissolved. So once the partnership business has been dissolved, that is now when we prepare what we call realization account. Don't worry, we are still going to talk about this, just introduction class. When you hear realization account, it means that the partnership business has been dissolved. So, and one of the reasons why there may be many reasons why a business will fail. And one of the reasons why a business will fail, sometimes it may be as a result of the death of owner. So if one of the partners died, then that may be the reason why the business is being dissolved. A slower decision making due to need to and just like in a sole proprietorship, there's a fast decision, because you are not really calling many individual. It's just you, even though other can contribute, but the final say only belong to the owner. So, but in a partnership business, it is slow. It is slow in terms of we have to conduct. We have to consult different partner. This one may not be available for today's meeting. We can adjourn the meeting to everybody and so the decision making process is going to be slower. Sometimes they are making decisions. There are some that will agree. There are some that will reject. Unless a clause is written into the original agreement, and the original agreement of the partnership is what we call partnership deal. When partners leave, the partnership is automatically dissolved, and another agreement is required by existing. Yes. So if let's say we are 5 now, and another individual is going, so there has to be a changes in structure now. And if there's a changes in structure now, so it means that a new partnership agreement has to settle. We have to have a new agreement. So this is a brief disadvantage of these forms of business organization. And the third one is what we call company, but we are focusing on limited liability company. Please don't forget. In a company can we can have 3. We can have companies by shares, we can have by guarantee, and we can also have we can have limited. We can have by guarantee. Yes, and we can also have by shares, and that is what we are referring to as limited. So a company is a special forms of business entity. Nearly all companies in business are limited company with limited numbers of shares. So most, if it is a company, majority is company limited by is limited by shares. Meaning that in case there's a problem in the future, I can only lose up to the amount that I have agreed to contribute to the business. let's say, for example, now there's a word, this business, there's a word, this, there's a business failure, there's a corporate failure, and I invest, well, let's say I purchase what 20,000 units of share at what at 10 million. So if in case there's a corporate failure now, I can only lose up to the amount of share that I have agreed, that I have purchased. There's no need of me having to sell my private profit, my private property to meet this certain obligation. No. There's no need of that. So what are the features of this? Ownership of the company is represented by what? Ownership of what? Ownership of shares. So the ownership of company is represented by what? Is represented by your shares that you have. If you don't have shares in these companies, then you are not a owner. Unlike a sole trader or a partnership, a company that has a status of legal person in law. And in some texts in law, they refer to companies as artificial human being. Some of us are doing this law, you are going to understand this better than I am now. So there are some time in law, company is a legal individual as well. But it's being called, sometimes they'll call it artificial human being, meaning that it is being controlled by a natural human being. But in case there's a problem, it's also a human being, is the one that will take care of it. So there's and that is now when the accounting concept called entity concept is now coming in, meaning that the owner of the business is different from the business himself. You have shares in MTN Nigeria now, but it is MTN Nigeria is different from Mr. James. Okay, so there's a MTN Nigeria is a separate human being in law as well. So you yourself, you are also a separate individual. So in accounting now, the business, we have to keep it separate from the owner. All right. So there's this legal a company is a legal person in law as well. That is another feature. A company can be a legal owner of a business asset. Yes, it can also sue and be sued. You can sue a certain company, and this company can also sue you as well. There are sometimes maybe a pharmaceutical company now that you claim that if I use this particular drug, it's going to cure this disease, but I use this particular drug and this particular individual develop another sickness as a result of using this particular drug. So this particular individual now can sue the company, and company can also sue. So it can be sued and be sued. Another one is another features of limited liability companies is a company is also taxed separately from its owner. The company is going to pay what we call company income tax, and the owner are going to pay personal income tax. Maybe some of us could have been filing our personal income tax to various internal revenue within our state of jurisdiction. So, but company is not going to be taxed on personal income tax. It is the individual that will be taxed based on personal income tax. But company is taxed based on company's income tax. Company is liable for his own liable for his own debt. Company is liable for his own It's liable for his own debt. You have shares in a listed company now. And if you look at the statement of the company, they're also going to have debt. And let's check one financial statement now. The listed company. Okay, hold on. I think I still check down with if MTN is available, so that you're able to see it. MTN 2021 annual report. I'm able to see it now. And that is very good. The first company in Nigeria that issues financial statement within a month. At least most companies usually wait for for 3 months, at least if they are fast. Okay, or it's not yet uploaded. Okay, this is 20. Can I have 2021? Okay. So the asset of the company is going to be different from the what is going to, you can have your own what, you can have your own liability. Okay, so your own liability is different from the what, the liability of the business. Let me just say what's 140. Okay, these are what, let's go to their statement of what, these are statement of what, financial position as at what, 31st of what, 31st of December and 2020. And have it at the back of your mind that what, financial statement are prepared in what, in comparative what, financial statement are prepared in what, in comparative what basis. Financial statement are prepared in comparative basis, meaning that we are going to have what last year, and we are also going to have what, we are also going to have this current year. So you can see their asset, you can see their equity. So you can see now the liability now. You can see their liability. We are still going to talk about what's the meaning of current and what is the meaning of what non-current liability. You can see they have liability now. It is different from what? It is different from your own liability. So the liability of the company is different from the owner's what? Liability. Oh, I'm still going to be making use of this MTN annual report. So the company is what, is liable for his own what? For his own debt. So I'm not the one that was, even though you are the shareholders, you are not the one that what. It is the business that will sort that one out for himself. So these are futures of what? These are futures of companies that are specifically on what? Unlimited what liability company. We can have what? We can have other forms of what? Business organization. The ownership of the company is represented by his what? Ownership of shares. You have a legal person, it can be sued and be what? And be sued. The company is what? The company is taxed in law. The profit of a sole trader and the business partner are taxed based on what? Personal income tax. And the company is also liable for his own what? For his own debt. What are the what? What are the advantage and what's also the what? The disadvantage as well. Let me take what? Two of this. Advantage of what? Trading as well as limited to what company. Limited liability makes investment less what? Less risky than being a what? A sole trader or investing in a what? In a partnership. It makes it what? Less what? Less risky in terms of what? In other forms of what? Business organization, you may be selling your private property. But here, there's no what? That is not what? That is not what? That is not the case. Like MTN have what, they have a certain liability here now. So that is not what, it's not the owner that will be trying as much as possible to make sure that these liability are what are set to. It is what is the business. So, but in case of what partnership and what sole proprietorship, oh, there's a problem. Limited liability makes what raising finance what easy through the sales of what shares. MTN just go for what, you know, during the last year, they made a public offer. And they are the first company in Nigeria as well to use that means to acquire shares, meaning that you can just go to the NX website, you create account, then you acquire shares. The maximum that you have is 250, the minimum is 20. So they make they make it very easy. That is, raising finance is easy, using use of shares. And with the use of technology now, it is more easy. Once your performance is good, people will always be ready. And their shares is even oversubscribed. Sir. The MTN share that they go for public offer in during I think they started in December 4th was oversubscribed. So just develop a good channel, a channel that is comfortable for that is very easy for your and people will subscribe. Even though you have less than 5,000, at least less than 5,000 is enough to buy a minimum of 20 units. And another one is a limited liability company has a separate legal identity from his shareholder. There are tax advantage of being a limited liability company. A company is taxed as a separate entity from its owner, and the tax rate on company may be lower than tax rate for individual. Although even there are some companies that nowadays through the Finance Act, we are still going to be looking about that when we get to the regulation aspect. that you know, even though you're a limited liability company, but if your turnover for a certain period is not above, 20 million, then the federal government will ask you not to pay tax. Then another advantage is what? It is relative what easy to transfer what shares. Just contact your what? Just contact your stock what? Your stockbroker. Then you can what? You can transfer a what? A shares to me, and I can also transfer a share to you. At least, and what we just need is just our what do they call this number? CCIS at this stock. I forget the full name. That is, every share is a number that what every share would have what you need to have. So to transfer a share is very, very easy from one party to another. So these are the advantages of that. Let's also look at briefly of the disadvantage. A limited liability company have to publish annual financial statement. This means that anyone, including competitor, can see as well as badly they are doing. Yeah, these are another disadvantage. You can see now that I can just go to MTN website now. So, but it is required based on what the CAMA. It has made it mandatory for every company now to publish their annual report on their websites. So if you have a company now that is if you check their website, you can't find you can't find the annual report. That means that there's they are not complying with the requirement of CAMA. So anybody can come in now to check, because, and it is also required that apart from just your financial statement, you also need to give a note to the account. You have to also, you can see, you have to provide a note to the account that, okay, how do you get all these figures now? You have to provide a note. Like, for example, now you can see, they say the revenue, meaning that is we say note 1. Maybe in class now, we can call it working 1. So you can see now how do you arrive at this 6,755 is the detail is given. So your words you can see this is how they arrive at the figure of that current year of 6,755. So that is another disadvantage of it, but it's not really a big disadvantage. This is the current environment. A limited liability company make financial statement have to comply with legal and accounting requirements. Legal and accounting requirements. If I check this particular report now, I'm going to see let's look at their words. They also need to tell us what they use, the framework that they used to prepare this the framework they used to prepare this particular financial statement. Okay. So also need to be it also needs to be provided. And I think I'll see that, okay, this is a note to the account. Release of okay, these are the note to the account. There are also a section that they also need to tell us, and it will be in the note to the account as well, or in the opening paragraph of the report. Especially the audit report will also contain that as well. That the basis that they use to prepare it. So that is another that is another work that the company has to do. In terms of your financial statement has to comply with with certain regulatory standard. And which we are still going to talk about 4 of them. Is it 4 or 5? We are going to talk about 4 standard. Is it 4 or 5? 1, we are going to talk about IS1 in this syllabus. That is International Accounting Standard 1. We are going to talk about it. We are also going to talk about International Accounting Standard 2, which is it has to do with inventory. And don't worry, let me also show you that as well. It also needs to be mentioned in the syllabus. Okay, let's go down. This is your syllabus. The standard will also be there's a so you can see it. So these are the applicable accounting standard that we need to familiarize ourselves with when we are preparing our financial statement. We still have many of them. So as you are moving on, you will also be coming across more of them. So, but for this particular syllabus, financial accounting, now we are only consider about 5 standard, which is what we are going to talk about. IS1. IS means international accounting standard. International accounting standard. We also be looking about one, which has to do with presentation of financial statement. We'll also be looking about 2, which is IS2, deal with what? Inventory. We'll also be looking about 7, which is what? Statement of what? Cash flow. We'll also be looking about what? IS8. We'll also be looking about what? IS8, which is what? Accounting policy, changes in accounting estimate, and what? An error. And the last one is what? IS16, which has to do with what? Property, plant, and what? Property, plant, and equipment. So these are the applicable standard as well. So as a what? As a limited liability company, there's a what? Even though you don't have people that understand it in your organization, you have to employ what? You have to employ people to understand, because your financial statement has to comply with regulatory standard. Financial statement of large limited liability company have to be what? Have to be audited. Have to be what? Have to be audited. And if you look at this what? If you look at this particular MTN's MTN's annual report, there's going to be a section for what? For auditor what? For auditor report. There's going to be a section for what? For auditor what? Report, which is a what? It is mandatory for you to have your what? For you to have your account audited. It is good, but it also comes with what? It also comes with a certain what cost, because you also need to pay the what? You also need to pay the what? You also need to pay the auditor as well. Okay. You also need to pay the auditor. Then another one, share issue are regulated by what? Share issue are regulated by law. If you want to issue share, it has to be regulated by the Nigeria Exchange, what? Nigeria Stock Exchange. So these are the disadvantages in terms of what your annual reports are made available. So every what give information for your competitors to also check, but don't be carried away with that. Just continue what performing better and have a what? Have a good strategy. So your financial statement has to comply with what? Legal and accounting requirements. You have to have your account audited. Your share is being regulated as well. So those are the introduction aspect to what? To business organization. So the main work that we now need to start now is that, okay, once we understand what different forms of what business organization, then we now need to be talking about accounting. So accounting will come in next after we understand, oh, these are different forms of business organization that we have. So once you have a business, now you have established a business, then the next thing is you have to employ what? You have to employ accountant, because once you establish the business, then transaction will be coming in. Once transaction is coming in, you need to have someone that will be managing that on your behalf. So what is accounting? Please have a look at this. Just for like from few seconds now. What is accounting? Say accounting is a what? Accounting is a systematic and comprehensive what? Recording of what? Financial what? Transaction. Pertaining to a what? To a business, and the process of what? Summarizing, analyzing, and what? Reporting those transactions is what? Is accounting. But one of the most definition that we use is this. That accounting is a word. Accounting is a process of identifying. You need to identify the transaction. You need to identify the what? You need to identify the transaction. That is it. The next thing that you need to do now is that once you identify, oh, this transaction occurred, there's a what? There's a sales of what? Goods to a customer. That's a what? That's a transaction. You need to identify that. Then you now need to do what? You now need to, after you identify, you now need to record it. And the process of recording business transaction is what we call bookkeeping. The process of what? The process of recording business transaction is what we call what? Bookkeeping. The process of recording business transaction is what we call what? Bookkeeping. So once you identify the transaction that occur, oh, there's a sales of goods on credit, there's a sales of goods on cash. Then the next thing, after you identify this event that have taken place, the next thing that you have to do now is to what? To record it. Is to what? Is to record it. Record it. And so the process of recording this business transaction is what we call what? Is what we call bookkeeping. Then after you record, you now need to what to measure. And we have we have accounting standard for that. Like for example, now if I have inventory based on what this particular standard that we talk about now, which is what IS2. IS2 deal with what with inventory. And if you want to measure inventory according to this standard, it said that inventory should be measured at lower of cost or net realizable value. Don't worry. We are still going to be doing that as well. You say what based on this standard, it's saying that, oh, how do you measure inventory? Because for every transaction in accounting, there's already a regulation for it. So there's no really a big problem. The standard is already there. That, oh, if these particular things occur, just go to the standard. The standard will tell you, it will give you a guidelines on how you need to do it. So if I want to measure my inventory now, I know that what inventory, please, in the olden name, we call it was stock. Maybe some of us will come across that before. When we say stock, stock means what? It means inventory. The new accounting name that we call that is what? We call it inventory. So if you have inventory now, how do you measure inventory? How do you know, oh, what are the bases I'm going to use to measure it? It is what IS2 is already there for you. And IS2 is saying that what inventory is measured based on what lower of cost or net realizable value. That is the basis. So after you identify, you have what you record, then the next thing you do is to what you measure. And after you measure, you now classify. And please don't forget, have it at the back of your mind now. I want you to please note it down as well. Please, I want you to note this down. That every what, look at this financial word, look at this annual report now, so that you'll be seeing it practically. Okay. Let me go to 130. It's not 138. Please note to the account. So now look at this financial statement now. This financial statement that you're looking at, every item that is here now, because I want you to note it down, we can categorize, this is a financial position now. So every item that is here now in this statement of what financial position, maybe some of us, because you could have come across it before, that people will call it what balance sheets. So this is a balance sheet now, but we don't call it balance sheets anymore. We call it what statement of what financial position. So item that is here now can be categorized into what? We can categorize it into into what? 3. Item that is here now in the statement of financial position, we can categorize them into how many? Into 3. We can have what we call assets, as you can see it at the top. This is assets. The second one, we can also have what we call what? We can also have what we call liability. You can see that as well. Then we can also have what we call what? We can also have what we call equity. Where is equity? This is what equity. So item in the statement of financial position can be categorized into how many? Into 3. We can have what we call what? Assets, liability, and what? And equity. Then we also have what? Statement of what? Statement of profit or what? This is a what? Statement of profit or loss. So this is a statement of profit or loss now. Item that is here, we can categorize it into what? 2. Either what? Revenue, either what? Income or expenses. Either income or what? Or expenses. And that is why we say what? We have what we call what? 5 elements of what? Of financial what? Statement. Whether it is what? Whether it's a statement of profit and loss. So far that it is what? It is financial statement. We can have statement of profit or loss that you are looking at here. This is what we call what? Statement of what? Statement of profit or what? Or loss. We can also have what we call what? Statement of what? Financial what? Position. We can also have what we call what? Statement of what? Cash flow. It's not what? can also have what we call statement of cash flow. We can also have statement of what? Changes in what? In equity. Statement of changes in what? And also have statement of changes in equity. We can also have what? We can also have statement of what? Cash flow. And we can also have what we call what? Note to the what? Note to the account. So you can see now that the note to the account of this particular, because it's not a what? These are what? Multi-million naira what statements. So it's not even an error. So they also have a lot of what information that they need to what that they need to disclose. And you can see we are still about their what their note to the what to the account. So please don't forget this. We can have what we have 5 elements of what financial statement. We have what we call assets, liability, equity, expenses, and income. The first 3, which is assets, liability, and equity, we can find it in what? In the statement of what? Financial position. While the remaining 2, which is income and what? Expenses, we can get it from our what? Statement of what? Profit and loss. So after you measure, then you also need to classify it as well. So is it asset? Is it what? Liability? Is it equity? Is it what? Income? Is it what? Expenses. So after you classify, you also need to verify whether all the information is what is okay. Then you also need to summarize. And that is why you can see here that in the what? In the statements, if you look at this statement now, this annual report that you're looking at, you can see we have what we call what? Note to the what? We have what we call note to the account. And these are still what? These are still the note to the what? These are still the note to the account. So the note to the account is just what? Statement that we are going to be provided now, it will be in what? In summarized form. It will just be like a what? A 1 page. So you can see here now, look at this. Okay, at least we are fine now. So these are what? This is a statement of what? Of profit or loss now. Which one is this? This one is statement of what? Comprehensive income. You can see this is like a what? This is a summarized form. So if you now need, if you need what? Extra information now, you now go to the note to the account. There are some companies that what? 1 page is enough to what? To represent their what? Their statement of what? Profit and loss. Just as you are what? This is a 1 page now. This is what? This is also another what? This is also another statement now. Cost statement of what? Financial position. This is also a what? A 1 page. We can also have what? We can also have statement of what? Changes in equity. This is also what? 1 page. You can see just what? 1 page. We can also have what? Statement of what? Cash flow. This is also what? This is also 1 page. So this is in what? You are summarizing the information now. So if there's any what? If there's any users now that is interested in getting what? Details of this, that what made up of what? This on 78,580 now. What made up of this 78,580? You go to what? Note 2.7. If you want to get what? Detailed information about this particular amount now, which note are you going to go to? You go to what? Note 2.7. So we are preparing the what? The information and in a what? In a summarized way. So, but the detail is also available, because for you to have summary, there must be detail. So the detail is also available, and if you want to know the detail, you go to the what? You go to the note to the account, and this is what? This is the note to the account now. And you can see now that the note to the account is starting from what? Page 28 to what? It's starting from page 28 to what? To 135. So what made up of this what? This page now, this 5 page, their statement of what? Profit and loss is 1 page. Their statement of financial position is what? Is 1 page. Statement of what? Cash flow is 1 page. Statement of what? Changes in equity is also what? 1 page. So if you need what? Extra information now on how we arrive at the figure that we provide here now, you are going to go to the note to the account. So that is another accounting, meaning that what we need to summarize. So if you want to know the details, you go to what? You go to the note to the account. Then you also need verifying, you summarize, then interpreting and communicating what financial what information. And we do that using what we call ratio. There are many ways we can interpret information, we can present information. But in accounting, one of the major tools that we use to interpret and communicate financial information is that we use ratio to interpret what financial statement. And once you calculate the ratio, then you also need to interpret it. That is not enough. Just saying, oh, if you want to get gross profit margin, which we are still going to look about, oh, gross profit divided by revenue, then you multiply it with 100. That is formula. So if you get the percentage now, you also need to communicate it to the stakeholders as well. So calculating it is not enough. You also need to communicate it. There are some of your manager now that you can be reporting to at your workplace as an accountant. But how you arrive at the figure, they may not really understand it. So you can't just provide the figure for them and you go. You also need to explain to them, oh, this is how I drive my break-even point. You also need to explain to them. That is what communicating. Once you interpret it, you also need to communicate. You can't just tell your divisional manager, oh, for us to break even, let's produce 1,000 units of this particular item. They also need to okay, what are the data? How do you get this? So you just provide calculation for them, break even is this divided by this, and you go, no, that is not enough. You also need to communicate to them as well. Some of them may not know how you arrive at the number. So you also need to the formula that you use. So you also need to explain to them as well. And you'll be doing that in your management information if some of us are doing it. So what are the main purpose of accounting? The main purpose of accounting are to provide a record of financial value of transaction. And in doing so, to establish a financial control and reduce the risks of fraud. To provide to assist with management of the financial affair, to provide information. And one of the main purpose of accounting is information to stakeholders about the current position of that particular entity. That's one of the main purpose of accounting, is to provide information to stakeholders about the current position of that organization. So we have type of accounting, or sometimes we call it scope of accounting. We have different area of accounting. This particular subject now called financial accounting is a single word. This is not the end. We still have financial reporting, we still have corporate reporting, we still have performance management, we still have MI, management information. So when we say scope of accounting, we can also call it type of accounting. Okay. We have financial accounting, it is that's what we are talking about in this syllabus. Other subjects will be they will be taking up the remaining one. We have financial accounting, and this is the process of recording, classify, preparation, and interpretation of financial statement, so that both internal and external users can make informed decision. So that's the main purpose of providing financial statements, so that you're able to make informed decision. So that if you're able to look at this financial statement, you're able to look, oh, this is a cash flow statement, you're able to assess that, oh, what is the profit that this particular company have during this year? And that will be in their you're going to see it in their retained earning. You can see this, retained earning. This is their undistributed profit. So this is the profit that they have at this particular time. So if you have this information now, it will enable you to make investment decision of whether, oh, I'm going to invest in this company, or I'm not going to invest. If you are existing shareholder, whether you are going to increase your investment or you are going to sell, financial accounting will provide such information. We also have another branch or scope of accounting called cost accounting. Cost accounting is a procedure of accumulating cost data. Is a procedure of accumulating cost data to provide information for planning, control, and decision making by management. Cost accounting is a what? Is a procedure of accumulating cost data, looking for what different cost information in order to provide information for planning, for control, and for decision making as well. Then we also have what? Performance management. Don't worry, at what? Maybe in the next day, I pray every one of you is going to pass this level. Then you move to the next one, which is what this particular subject is what we call what? Performance management. Just the continuation of your word of your MI, which you have at this foundation level now. We all what? Performance management. And performance from the word, is a two-word performance, and we also have what? Management. Performance management is a word, it's a continuous process. It's a what? Continuous process where what? Managers and employees combine efforts in planning, monitoring, and reviewing the effectiveness of the workforce towards the achievement of the what? The overall objective of the entity. That is what? Performance management. It is not what? It is not true. It is not only the manager that have work to do. The employee also have what? So let's combine what? Let's combine what? Let's combine resources together. Let's combine what? Let's combine what? Resources together. So if you're able to combine resources together, then we're able to what? We're able to achieve the what? We're able to achieve the what? We're able to achieve the overall objective. We also have auditing. Auditing as well is also another what? It's also another area of what? Of accounting. And in this particular what? In this particular annual report that you're looking at, there's also need to what? There's also need to have auditor what? Auditor report. You're going to see it. Where is the starting point? Okay, this is the director report. Then this is what we call the what? Independent auditor report. Independent auditor what? This is the independent auditor. This is another what? This is another area of what? This is another area of what? Of accounting called what? Auditing. And various by what? In the skills level, we also have a what? A subject for that called what? Audit and what? Audit and assurance. Even at the professional level, the final, we also have what? Audit as well. So this is what? Audit is another what? Is another area of what? Is another area of accounting, where the auditor is going to give opinion about the what? About the statement, about the financial statement, whether it shows a what? Whether it shows a true and fair view or what or not. We also have what? Government accounting. That's what we call it nowadays. What? Public sector what? We call it public sector what? Accounting. And that's also at the what? At the skills level. Public sector accounting, because the ministry, department, and agency, the public sector organization also need to have record. They also need to have record, and they must also subject it to audit. And apart from what in accounting that we have what? International accounting standard. There is also international standard for what? For public sector accounting, and that's what we call what? IPSAS. We call it what? IPSAS. And it's for what? Those are the standard that is what that we apply for what? For public sector what? Accounting. So in the private, that we'll be talking about IES now, international accounting standard. In the public sector, there's also a what? A standard which you are also going to be coming across when you get to what? The next level, a skills level. And the name of the subject is what? Public sector what? Accounting as well. Or maybe some of us could have come across this before. We also have what? Taxation. There's also another area of what? Of accounting that we can also specialize on. Can have what? Can have a tax accountant. So maybe in your in your organization now, there may be a certain account officer that is called what? Tax accountant. So taxation is also another area of what? Accounting. We also have what? Financial management as well. And financial management deal with three things. Financial management deal with how many things? Financial management deal with what? Three things. It deal with what? Investment decision. It deal with what? Financing decision, and it's also deal with what? Dividend decision. That is the function. We also call it what? Function of financial manager, or decision that financial manager has to make. Your finance manager in your organization, it have three core rules, which is what? Investment decision. It have what? Financing decision, and it also have what? Dividend decision as well. Then we also have another area of accounting called what? Forensic what? Forensic accounting. Forensic what? Forensic accounting. And in what? My faculty in what? In ICAN is what? Is forensic audit and what? And investigation. So I mean, what I'm in what in ICAN, I mean, members of forensic audit and what in investigation faculty. So, and when we say forensic accounting, anything forensic, just have it at the back of your mind that there's a word we are talking about court. There's a legal proceeding about it. So when we say forensic accounting, are those what accounting information that will be made available in the what in the court of what that will be made available in the court of what that will be made available in the court of law. So anything forensic has to do with what it has to do with law. It has to be what a legal proceeding. We also have what we call what social and what an environmental accounting. I think the new name we call it what EMA. Environmental what we have environmental management accounting. So it's another area of accounting. EMA, environmental what management accounting. And we also have nowadays that we have what we call sustainability reporting. If you check what annual reports of what of listed company, you are going to see a section called what sustainability reporting. Even in South Africa, they are one of their corporate governance requirement is what's the name of this report? We call it King's Report. King's Report is the corporate governance code in South Africa, and it introduced what we call what integrated reporting. I think I was. Let me have another word. Local word. Okay. Let's continue this Dangote annual report as of what 2021. Okay, I think 2020. All right, when it loaded, we are going to so there's going to be a section called what sustainability reporting, and every organization you should try as much as possible to be sustainable. Don't do anything that will affect the future generation. So every organization try as much as possible to be sustainable. What you are doing now, can you continue to do it? Just like what as individual as well. Everything that we are doing, it has to be what sustainable. Most of the things as organization, as individual, you should be thinking of what is tomorrow. What we are doing now, that you are doing a fake advert now. Is this sustainable? Is this something that you can continue to do? That you are lying to your customer that if you buy this particular product, it's going to do this for you. It's going to last for this particular hour. All these fake advert, is it sustainable? Then we also have bookkeeping. Bookkeeping is also is also an area of accounting, and bookkeeping is a process. That is, I make mention of that earlier as well. The process of recording business transaction is what we call bookkeeping. So we also have accounting system. Accounting system. What is accounting system? Business entity operates a system to record business transaction in accounting record. This system is what we call bookkeeping. When we say accounting system is accounting system is like bookkeeping. Is a process of recording transaction. The process of recording transaction is what we call bookkeeping. So very soon now we'll be doing we'll be recording business transaction. So what is now the difference between accounting and bookkeeping? Because we say bookkeeping is a process of recording business transaction. This might be being best explained by comparing the work of bookkeeper with that accountant. Have it at the back of your mind that bookkeeping is bookkeeping is the process of recording business transactions that occur when you record the damage as a bookkeeper. But as an accountant, we are not only recording business transactions, because some of these things that we talk about, look at this other area called environmental management accounting. This one now is that we are looking about the footprint. We are looking about the impact that the organization have on its environment. When we say organization footprint, is the impact that you have. So we also have a special accounting called we call it environmental management accounting. It deal with assessment of organization with their environment. Assessment of organization with their environment. That is what we call EMA. environmental what management accounting. So as an accountant, I'm not only doing record. That is a very low job. But I'm also doing other things as well. I can be doing tax. I can be doing this EMA that we are talking about. I can be providing information like forensic accounting that will be what that will be required in the court of law. So we can look at the difference between what bookkeeping and accounting, looking at the what are the work of accountant, what are the work of bookkeeper. Bookkeeping is the first step in accounting process. Yeah, let's be honest, it's the first step. Because you can remember now that we say that what accounting is the process of what? Look at the first word. Accounting is the process of what? Identifying. The next thing that comes in is what? Is recording. So once you identify the transaction, oh, this is what occurred. What will next is what is recording. And the process of recording that business transaction is what we call what? Bookkeeping. Bookkeepers are responsible for what? Maintaining a record of all transactions entered by the business. A bookkeeper entered the transaction into the accounting system to produce an accurate and complete record of what? A complete record of financial transaction of a business. So once the bookkeeper records it, then accountant will not take the information up. Once the bookkeeper record, oh, this is what happened. There's a sales this particular day. The customer paid this particular day. We purchased this. We deposit this particular money in the bank. We withdraw this particular money in the bank, and this also did. So once the bookkeeper able to capture all those transactions, then accountant will not take it off. Accountant use the information recorded by the bookkeeper to help to now produce what? To help to now produce the financial what? To help to produce the financial statement. And other what? And other report as required by what? As required by management. Bookkeeping is part of what? Accounting, yes. But accounting is more wider in scope than bookkeeping. Because bookkeeping now is just to record what? Business transaction. So there are some what? Transaction that does not have to do with business. So who would take that information up now? You see, what is the accountant? Sorry. So accountant use the information recorded by the bookkeeper to help them to produce financial statement. Another report. Bookkeeping is part of accounting, but accounting is what? Accounting is wider in scope. Accountant could easily perform bookkeeping. And the bookkeeping that we'll be doing in this particular chapter is just what? It's not just 2 chapters. That is the word ledger and what? An accounting equation. I can even manage it to be what? At least in the one class, I can do a bookkeeping. But other things that we are going to be doing now is what? There are more than just to record transactions. It's not about just recording. In accounting, I'll also check whether the bookkeeper has not made a mistake. And if I have to do that as well, check that the ledger, the entry that is doing is correct. So if there's a correction of error, and still the accountant that will do that. If you want to produce the financial information, that is the accountant. Accountant could easily perform a bookkeeping function, but the bookkeeper could require a lot of education and training before becoming a accountant. Well, accounting is what? Accounting is wide. Look at these different areas that we are talking about now. Government will look at social, forensic, financial management, taxation, government accounting, and all of them have they have regulation. The word are auditing now, there's standard for it. We have ISA, international standard on what? On auditing. And when you are doing audit as well, it's not only ISA that you are going to comply with. There are other regulatory standard that you also need to comply with. If you are doing government accounting as well, in Nigeria now we have at least we have our constitution. In international scale as well, we also have IPSAS. So it's for you to be an accountant, you require education or and what and good training. And that is what you are doing now. So what are now the role of accountant in business? What are your role? What are the things you do? And let me give us a word. Let me give us a word, a 1 minute break now. So have a look at this now. Role of accountant now. And let me shift it down to at least 5. Okay. At least in the exam, the maximum they can ask you is what is 5. So what are the role of accountant? So at the end of this class, you should be able to know what are the role of what are the role of accountant, what are the things that accountant do for business. Because every business require what every business requires. Because if you say what, there are some texts that say what accountant is the what? Accountant is the language of what? Accounting is the language of business. So every business organization cannot do without us. And there's a theory that says that what accounting is the word that is in business. We have other professions like what the law and other professionals, but what the profession that really interact with what with business is what is accounting. So what are the role of accountant? We have financial reporting. Have a look at it. Compliance, strategy, planning, control, taxation. We also have system. We also have auditing. Okay, so these are our role. So accountant, we have a role in what? In business. And we also have a role in what? In the public as well. The Nigerian economy need what? They need a good accountant. Every economy of the world, they need accountants. They need us. So, but let's start from the what is the role of accountant in what in business. The first one we have what we call what financial reporting, and that is one of our work. What you are looking here. Okay, let me check what these Dangote annual what this Dangote annual report. So there's the input of what? There's the input of accountant here as well. So it's not just only about in what in business, but it's also about in what economic as well. So financial reporting, just like what we are looking about here, is the what? I'm sorry, is MTN. This is the work. This is the work of what? This is the work of an accountant. We produce what? We produce financial what? We produce financial statements. What else do we do? So we also have what? Compliance. So accountants are involved in ensuring that business comply with certain aspects of company law. Company must prepare financial statement in a given form. So the reason why you what? Look at this board. Look at this annual report now. So you can see this is what? This is how we prepare financial statement. We prepare financial statement in a comparative basis. Comparative basis in terms of what you are going to show last year, you're also going to show what this year. So accountants are involved to ensure that what every item that is here, it comply. Whatever the regulation is. So we ensure that business are what you are doing things in accordance the way it's supposed to do, not the way you like it. Accountant are also what we also provide strategy. And we'll be talking about element of strategy in BMF. And when we get to skill as well, we have a good course, a good subject I also take as well that deal with what strategic management. So accountant also we also help business in formulating what a good strategy. And why do you need to have a strategy? You need to have a strategy so that you're able to win. If a military now, if they're going for a war, they will say, oh, this is our strategy, maybe against Boko Haram. And the main purpose of having a strategy is for you to win. So in business as well, one of the main reasons why you need to have a strategy is for you to gain a competitive advantage. It's for you to be the best. So once you have your mission statement, you have your vision, you know your goals and objectives, then the next thing that you also need to do is to have a strategy. So strategy is going to help you to achieve your mission, your vision, your goals and objectives. So accountant can also help in that, in formulating what strategy. If this organization is making laws, we can provide a good strategy for them. So maybe the reason why you are making laws, why can't you change your strategy? And we have different strategy that organization can use. You can use what we call cost leadership strategy, whereby you are going to be your product or your service will be the lowest in the market. And if your product or your service is low, that means that more consumer will come in. So you can compete with price. What you just need to do is understand your business environment. Accountant also help in that. Planning as well. Accountants are involved in providing information used by business plan, their futures activities. Now, what information used when business plan their future activities. When you are planning, there must be what? Even if you are writing a business plan, there's a section for financial as well. So if you are planning against the future, then the monetary is also involved. So the accountant also have a role to play in that. In terms of planning for future, we plan for future. So if you are also planning for future as well, then monetary is also involved, which is the accountant can also help in that. Can also do what? Control. Control is another role of accountant. We also have there's a mistake here, which is decision making. Decision making. Accountants are involved in providing information used for for decision making. Decision making. And such information you'll be coming across in MI, which is still here. There are some information that is for decision making. There are some information that is for control. There are some information that is for planning. We also have taxation. Some organization, we have what we call tax accountants. And system, accountant can also be involved in helping to design accounting system, your accounting package, your installation of the software that you are using in your organization. Accountant can also help. If there's a need for us to amend some section of of your software, then the accountant can also come in if you understand the system. So these are roles. Please don't forget this. The role of accountant in business: financial reporting, compliance, strategy, planning, control, decision making, taxation, system. So accountant, our role is not only about it's not only about in business, then we also have a role in economic as well. It's not only about in business, but also in in economy. Accountants contribute to the success of business. And that the success is of vital importance to the economy. If business is growing, economic will also grow. They have They have direct They have a coordination between business and economy. If a business is is thriving, economic will also be good. If Nigerian economic is good, business activities also need to contribute to that as well. And how will a business be good? You need an accountant. You need a good record. People that are able to manage your resources in effective and efficient way. So if business is thriving, economic is also booming. The success of business provide employment. It generate profit. And once we generate profit, tax also come in. We also give the government as well. That, oh, government needs to collect 20% of it. And if the government collect the tax, what are they going to use it for? Is it not to provide the social amenities as we're supposed to have? Not in our current economy now. Wages and salary awards are taxed. Business will pay tax on their what? On their profits. If you send the money to me now, and if it is above what? If it is above 10,000 naira, then I'm going to pay what? A stamp duty of what? Of 15 naira. Stamp duty is not a form of tax. So if business is not what, it's not going on fine, how do you want to get that particular amount to send to me? If business is not good, how do you want to pay tax? And if you did not pay tax, where would the government save money? Just to borrow. Even though if you are borrowing from a certain economy, they will get to a time that they will not pick your call anymore. And that's what we have now. So if you have a certain country that you borrow money, there is going to, and if they do a careful analysis of your business, of your environment, of your economy, they will not pick your call anymore. The role of accountant in financial reporting is particularly important. Business need capital. Economics also need capital as well. And that's why nowadays we have a lot of PPP, our private partnership incentive that is introduced. And that's why if you are in Southwest, you can every part of Nigeria, you can see some road that is constructed by companies. And we are going to the cost that you will spend on construction, then we are going to remove it from your tax. And there's a lot of there are some major roads in Lagos that is Dangote enjoy that. There are some other states as well that other companies also enjoy that incentive. Why would they able to enjoy that? It's because the business is growing. So if the business is growing, economic will also be good. But the government also need to utilize the resources very well. Because if people are paying tax, and there are some people are using it to drive private jets, using it to take care of their family, you can see there's a problem. Now let's talk about briefly before we go. We have regulation in accounting. Because this is the first class. I don't want to take you at least I still have to be lenient. But what are the regulations in accounting? We have what we call GAAP, General Accepted Accounting Principle. General Accepted Accounting Principle. And we have GAAP. In Nigeria, we have GAAP as well. And in Nigeria before, we have our own accounting standard. We have our own accounting standard called SAS. Called SAS. Meaning Statement of accounting standard. But due to harmonization, we are now using IAS, International Accounting Standard. There are some of our maybe some of our uncle that when they qualified as a chartered accountant, it was not Nigeria is not using this international standard then. We are using SAS, called Statement of Accounting Standard. But due to harmonization in accountancy, then we now have international standard. And majority part of our local standard before called SAS, we are no more using it. We are only using 3 of them, which is we have 2 standards that deal with there's one standard that deal with petroleum, which is upstream, and we also have another standard that deal with downstream, and there's also another standard that deal with telecommunication. So those three standard in what in statement of accounting standard in Nigeria, we are still using it. Petroleum is 2 standard. We have 1 standard for what upstream, and we also have 1 for what downstream. And there's also another one for what for telecommunication business. So those 3 standards are still used in what in Nigeria. But the majority part of the standard that we are using now is what is international accounting standard. So the general accepted accounting technique can come from what are the sources of this regulation? It can come from company law. It can also come from from accounting standard. There's also a requirement in CAMA that a Nigerian company has to follow. And one of the requirements of CAMA, which is like a company law now, is that one of the requirements of CAMA is that every company in Nigeria must produce 5 years financial summary. That's the requirement of the company law, the Companies Act. That every companies in Nigeria must produce 5 years financial summary is a requirement of CAMA. And one of the requirements of CAMA as well is that CAMA also require companies to prepare what we call value-added statement. The international accounting standard doesn't require that. But our local law, our local company law require company to produce value-added statement. And there are some countries as well, especially even in India. India also require companies to prepare value-added statements. So if you check annual report of Nigerian companies, you are going to see a statement they call value-added statement. That one is required by company law. We also have the one that is required by accounting standard. Just like we talk about the profit and loss now, the statement of profit or loss and other comprehensive income, the statement of changes in equity, the statement of financial position, the cash flow, and the note to the account. Those are the one that is required by the international accounting the international accounting standard board. Nigeria also adopt this as well. So every standard give us talk about 4 things. Every standard that you are looking at now, which we are still going to talk about, look at this standard now. IS1, 2, 7, 8, 16. Accounting standard come with 4 things. Accounting standard is going to tell us how we are going to recognize it. The recognition criteria. It's going to tell us how we are going to measure it. It's also going to tell us the presentation, and it also tells us the disclosure. So accounting standard cover these 4 issues. The recognition, how are you going to recognize that item? And for you to recognize a certain item, it has to meet a certain criteria. It has to meet a certain criteria. For you to recognize that, this is asset, it has to meet a criteria, which we are still going to look about. How are you going to measure it as well? Accounting standard we'll talk about that. How are you going to present it? Where are you going to include it in your statement? And what are the disclosure requirements as well that you need to add in your note to the account? Accounting standard will talk about that. Will tell us that. So we also have another one apart from the gap. We also have the Finance Act 19 and 20. And we also have a new one called Finance Act of 2021. It's also a regulation in accounting standard as well. And just like one of the key changes in the Finance Act 2021, the current one that we have now is one of it, we have what we call educational tax. Educational tax before in Nigeria, it is 2% of your accessible profits. But now it has been increased to 2.5% of your accessible profits. There's also a levy now for company on your net profit, which is you have to pay what we call the Nigerian Police Trust Fund. Nigerian Police Trust Fund, which is also 0.005%. So the Finance Act also serve as a regulation in accounting. There are some companies that will not pay tax, even though you have a profit. So the Finance Act is also a regulation. CAMA is also a regulation as well. And that's why I was saying that CAMA require companies to produce 5 years financial summary. CAMA also require companies to do to produce this thing, value-added statement. So karma is also a what? A source of what? Regulation in what? In accounting. And where we are going to stop for today is what? Financial Reporting what? Council. Financial Reporting Council Act of 2011 that was established during the what? The President Jonathan what regime. Financial what? Reporting what? Council. And what is the role of what? Financial Reporting Council? Develop and what? Publish accounting and financial reporting standard to be observed in the preparation of what? Financial statement of public what? Interest what? Entity. So the Financial Reporting Council has to tell us the what? The standard that you need to what? You need to follow, especially to the what? To the quoted companies. Review, promote, and enforce compliance with the accounting what? Standard adopted by the council. So when the council has set out a certain standard that you are going to use, they also need to what? To ensure that there's a review, they promote, and people are what? Are complying with that as well. Receive notice of non-compliance. So if you discover that what your company, you are not following what the Financial Reporting Council is saying, then you can also be asked to pay some charges or some fines. Receive what? Companies of annual reports of companies of public entries on what? From preparer within 60 days from the approval of board. MTN financial statement was approved is now on the 28th of January 2022. So within 60 days they send a copy of this to Financial Reporting Council. Even the Nigeria Stock Exchange usually require this. You go to the Nigeria Stock Exchange, there's a library where companies' annual reports are being kept. So let's stop here for today. In the next class, please have a look at this before the next class as well. What are the bases of accounting? We have accrual, we have cash, and we also have breakup basis. Objective of this one is what we call users of financial statement. That is, who are those that this financial statement that you are looking at now? Who are those people that are interested in it? Who are those people that are interested in this financial statement? We have many stakeholders that are interested: the investor, the lender, the supplier, the government, the public, employee, customer, managers, and the rest like that. So please have a look at it. We have component of financial statement, as I make mention. We have statement of financial position, the statement of profit and loss and other comprehensive income, statement of changes in equity, statement of cash flow, and we also have note to the account. So these are the five components of financial statement. And as you can see, this is income statement one. Okay, this is statement of okay, sorry, this is statement of comprehensive income. This is statement of financial position. Now this is these two. Statement of changes in equity. This is three. Then we also have statement of cash flow. This one is four. Then the last one we have note to the account. So these are the five components of financial statement. Okay, so have a look at them. And I told you earlier that we have element of financial statement. We have element of financial statement. We have assets. We have liability. We have equity. We also have income, which is that one is shown in the statement of profit and loss. In the statement of profit and loss, we have income, and we also have expenses. So in the statement of profit and loss, now you are going to find out two things, which is income and expenses. In the statement of financial position, it's comprised of the assets, the liability, and the equity. Okay, the asset and asset, liability, and equity, just like you are saying now. In this statement of financial position, now look at this. Information that is here now can be categorized into three. You can see assets, whether it is non-current or current. When we say non-current, are those assets that will last for more than one accounting year. Current are those assets that we are expected to realize within 12 months. You can also see there's a section for equity, right? Then we also have another section for liability. So these are the element item that is in the statement of financial position. Now we categorize it into three: assets, equity and what and liability. And in our what income statement, now that you're looking at statement of what income statement, we have what we can categorize information that is here into what income and what and expenses. All right. So business transaction, it can be what we have different business transaction. There's a card sales of goods, credit sales of what. All these are what we call what receipt of loan, payment of what, payment of loan, payment of what, payment made to what to employee. These are business transactions. So the process of now recording this business transaction is what we call what bookkeeping. The process of recording this business transaction is what we call bookkeeping. Okay. So please have a look at this in our what in our next class. I'll also make what general over talk about them as well. So please, before the next class, have a look at them as well. They are very, very easy to understand. And if there's any area that you need further clarification, please, I'll be glad to respond to that as well. Okay. So the note is already in the word in the group. If you are newly added after this class, I'm going to forward it back to the group as well. So what? Thank you very much, my people. Is there any what? If you have any question at this moment, please you can what? You can unmute yourself if you're what the environment is what is quiet, or if you have any question, the chat box is also there. Please you can put it there as well. So if you have any question on this, if there's any area that you want me to explain again, then I'll also do that as well. All right. So and thank you for joining. The class will always be what at 2 o'clock from 2 to what from 2 to 4. So if there's any question, please, the chat box is open. You can unmute yourself if there's any area that you want me to explain again before we go. So thank you very much. If there's no any question, we can stop here for today. We are going to continue in the next class by God. So thank you very much, and I wish you all the best. Okay. So please have a look at the materials as well.